Good morning, everyone, or happy lunchtime for those on the East Coast. Welcome to this May 1st DecisionPoint Trading Room. My name is Erin Swenlin, and I'm here with my father, Carl Swenlin, and we are going to let you know what's going on in the market right now. And then I'm going to be covering sectors, and then we will look at an industry group of some interest and maybe find a few stocks of interest. We will also be taking your symbol requests. That's primarily what we'll be doing for the second half of the show. And the Q&A box is where you're going to want to put everything in. I apologize up front for those of you who are watching the recording. We did have a little bit of a mix-up with the room this morning. It was set for Thursday instead of Monday. So just so you know, if you want to come in live, the link does not change. It is always the same room number. So you can always get into the room if you have one of your old emails that tells you how to get in. So you can save that first registration email and you'll never have to use a new one again. All right, the chat room is for you. Fred, our moderator, is already in there. He will welcome you into the room. Just make sure when you send anything in chat that you use the drop-down menu to send it to everyone. Otherwise, Fred won't see it and we will only see it, but we don't monitor the chat room. So if you want to talk to us and ask questions and symbol requests, that is the Q&A box. All right, I think I've done all our housekeeping, Dad, so it's all on you. What's going on in the market and what is on your mind right now?
Okay. Just remember it's Fed week, so not much is likely to happen today or tomorrow in the first half of Wednesday. Expecting an announcement on Wednesday at 2 p.m. Wall Street time. Until then, I think the market's going to be in a wait and see mode. So looking at SPY, it's come up against this line of resistance. Let me get my pinpoint going. Line of resistance here, and it did stop after it got there. So we had a PMO downside crossover last week, and as of this morning, it's gotten back up above it. So that's thanks to moving higher, but not very much. And again, we might see something like this for the next couple of days. Looking at the relative strength of cap-weighted versus equal weight stocks. RSP is an equal weight version of the S&P 500, and you can see where the at this point the cap-weighted stocks took the lead. Now they're kind of neck and neck. New highs and new lows. Basically, they're following price, so there's no news there. Let me go to the climax assessment chart. We had some activity on that last week. Here we started out with a downside initiation climax, and this was a downside exhaustion climax, followed by another downside exhaustion, and then we had an upside initiation, followed by an upside exhaustion climax. What it takes is we get there'll be four indicators in play. We have the S&P 500 net advanced declines, S&P 500 net advanced decline volume, and we have marks where we have the threshold of where a climax will be declared, one of those indicators. Then we have New York Stock Exchange up-down volume ratio and S&P 500 up-down volume ratio. And then for down days, we would use these NYSE down-up ratio and also S&P down-up volume ratio. So either on up days, these two are considered, and on down days, these two are considered, and these two are always considered on upside or downside moves. Anyway, we've got an isosceles climax and a little churn going on here. Well, the next few days, I don't think the market's going anywhere until it knows where things are going to be going in the interest rate column. Our bias assessment chart. Here we have the Silver Cross Index, which is the percentage of stocks in the S&P 500 in this particular case, with a 20 EMA above the 50 EMA. It's going down and it's crossed the signal line. This is as of Friday. This is an end of day indicator. So we're just under a bull market level reading at 49.8. The Golden Cross Index, which is the percent of stocks with the 50-day moving average above the 200-day moving average. And it's still on a crossover buy signal, and it's at 52%. But notice we've got new highs, prices about equal here, and these are both new lows. And this is a lower low, and I should say high, and negative divergence. Let's look at our short-term and intermediate-term indicators. Notice the short-term, we've got a negative divergence at this top. Prices went down, but they've now bounced in the short term. And the short-term indicators here for breadth and volume. Then we have the intermediate for breadth and volume, and it's actually turned up. But that can happen, as you'll see down the road. It can turn up and down. Generally, it trends a lot more slowly, and I'm still not convinced that it's not going to keep getting lower. It's due for it. Looking at the dollar index, it's up about a 0.5 percentage point today, which means gold is going to be down, and it's down about not quite it's a little stronger than the dollar today, but because it's not down as far percentage wise. Crude oil, basically a trading range, and if you look at this low and a bounce, possibly we've got a rising trend in the progress here, but we still have to get a high above this one. Treasury bonds, they're moving sideways. Short term, we've got this rising trend line, and it's broken below that. So we'll look for support here, and in failing that, I would look for it here. The rising trend line, but we're not going to have a place to draw it after a few days here. So I tend to look at the horizontal support and resistance. Interest rates, the 10-year Treasury yield is up strongly today, almost 3%. And excuse me, looking at the yield array as of Friday, it had ticked down, but based on what the 10-year Treasury is doing, I think all these will be ticking up today. Notice we've got a pretty solid level of support here. And I don't know, I haven't paid that close of attention to what the Fed is apt to do right now. I don't know what they expect, but we're down to incremental, very small increments of increase if they're going to increase. And of course, the hope is that they won't increase at all.
Yeah, I think they're looking for 0.25%
up. Yeah.
Mm-hmm.
So that would not make people happy, because I'm sure there are a lot of them out there saying they're not going to, that they're going to hold for a while.
Mm-hmm.
let's look at UNG. It's still bouncing along in the bottom here. One of the things you'll notice in this chart is there are a lot of gaps, and there's a reason for that. And here it is, natural gas, the natural gas continuous contract chart. The price is down to, well, between 250 and 225. So when you get a 3-cent move on that, that's over a 1% move. So, and that translates on UNG as a, it'll be a gap. You're going to get gaps all the time. You see them. So it's really hard to do any technical trading on that. Long term, we're at all-time lows on UNG. One of the things I wanted to point out too is notice back here, this is the weekly chart, but back in 2018, it had a 1 for 4 reverse split on UNG. And they would probably like to do that now, but it'll only increase the volatility and those gaps. Bitcoin, long term, here's the supported resistance. Right now, the dark line was the first line of resistance. It got above that, but then there's really congestion. You can see here and here and here. This is certainly a zone, and looking at it up close, we can see right now today it's breaking down, possibly breaking down out of this rising trend right here. Apple, it's looking at that chart this morning. We've got a rising wedge here, and it's headed to the top of that rising wedge. And it's been challenging because there have been numerous points that the wedge was not as steep as it is right now, but it's potentially most likely going to break down. That's about just off the top of my head, it's like a 70% chance when you see a rising wedge that it will break to the downside. Doesn't mean it's all going to go all the way to the basement, but it will have some decline, which may set a less accelerated rising trend line. We have one index or one sector index that we're watching today. It's the industrials, and we just had a neutral signal change on Friday, and as of this moment, we're going to have an intermediate term buy signal on it if it stays like this at the close. It's really threading along here, so in such a narrow range, that's why these signals are information flags, and you don't act on them until you really evaluated the chart. Okay, did I forget anything, or
Oh goodness, I don't think you forgot anything. We have a little bit of time. Can we look at some of those mega cap stocks? A lot of times we'll go through those. I know you did Apple.
Okay, so we've got Apple, and by the way, the increase in the yield on the 10-year is supposedly affects the mega cap tech stocks negatively. So that's what we're seeing today. We've got Amazon. Amazon's not been doing so great, and it's a much different business than Apple and Microsoft, et cetera. And it's looks like it might break down out of the rising trend, which is a short-term daily. Let's see. Alphabet, Google, a rounded bottom, potentially going higher. The main thing is we've got a bear market hanging over our head. Theoretically, right now we're in a bull market, but just barely. And so I question, this is certainly a good-looking rounded bottom, but be careful. native platforms doing really well with this gap up. Notice that gap's up stops just short of this line of resistance, which is set by this huge gap here, down gap. So maybe it's going to get above that or not. Right now, it's got to consolidate this huge move up here. Microsoft looking really well, that rounded bottom, and it's really following through. Certainly up above I would call this a confirmation line with these two tops here. Netflix consolidating, potentially breaking out of this triangle. NVIDIA doing really well. Also basically hitting this line of resistance drawn across this top. You know, this reminds me, just my own opinion, I would not own any stocks based in Taiwan or South Korea. Just wouldn't at this point, but that's my own personal opinion. Tesla gapping down here is potentially an Ireland reversal. I don't know. I'm not feeling good about the stock at this point. And that does that.
Okay.
Let's take a look, see if there are any questions.
Yeah, I was looking at it, and somebody did ask about the VIX. So we could put up that climax chart again.
Okie doke. We've got the VIX penetrated the upper Bollinger Band, and that's a pretty good short-term sell signal. You'll notice we get negative price movement when it's up in that area, when it gets up near or penetrates the band. You had a comment?
Yeah, no, I agreed. So, it is something we're watching, and we do invert our VIX. So if you're a little confused by the fact that it's rising instead of falling, mainly because overbought is on the top and oversold is then on the bottom, and the VIX is overbought.
Right. We look at the VIX a lot differently than everybody else. We think we use the reverse scale just so that it orients properly to overbought and oversold. And we also use a log scale, which I rarely use, but it helps us see what's going on in these narrow ranges here.
All right. I'll let you take a peek through the rest, but it all tends to go towards symbol requests.
There is one. It's saying any concern that the Dow Jones Transport are not confirming the move higher by the Dow Jones Industrial Average and S&P 500. Let's just look at the transports. This is the IYT, which is the Dow Jones 20 transports. This is a discussion of basically Dow theory, and the transports should confirm the up move in the industrials, and that's not happening. If we look at the Dow Jones Industrial Average, it's moving to a new high, but it's basically in a range. But the transports haven't moved in this direction, so that's I wouldn't say a sell signal, but it's a negative indication. And that's the only question up there.
Yep. And that would be, so there is concern, I guess is the ultimate answer. All right. Well, I'm going to jump in. We'll look at a couple of these sectors. All right. So what I like to do is start off with the candle glance of the sectors so we can see all of them on one page. And primarily I do that so I can see what's happening with my PMO on all of these sectors, because that really gives me the best idea of what's going on. So when I look more closely under the surface here at some of these PMOs, What I am noticing is defensive areas tend to be looking a little healthier, if you will. Consumer staples is on a really nice rising trend here. You can see that utilities, we are seeing a little bit of a turn on those. They were really performing quite well. Ultimately, we want to see the more aggressive sectors doing well. If we're going to look for a rally, that's where you usually are going to see the foundation built, is in technology, in consumer discretionary, comm services, which we really did see on that big move out of the March low. I mean, you can just see on all of these where those aggressive groups really took command. Technology, just like the market, all of these are kind of stuck below overhead resistance. The exceptions would be, like I said, consumer staples, which just continues to outperform in a major way. Comm services is trying to inch back in there along with consumer discretionary. You can see that the PMO on discretionary is in the process of a crossover, and you can see that for XLC, it's still on a sell signal, but we're starting to see some action there. So seeing some action going on in these aggressive groups is what we want if we want to see this rally continue. But I think there are a lot of downside pressures going on out there. I find it very interesting to see financials doing well. I think a good portion of this is due to how beat down this sector got. Then, and financials aren't always only banks. There's insurance, there's a lot of other stuff in there. And a lot of them got thrown out with the bathwater, if you will. When the banks started to fail, everybody in the financial sector felt the pain. So there are areas in financials that do look pretty healthy, but I have to tell you that based on what happened back here, holding a financial stock, if the bank thing's going to rear its ugly head again, which I believe it will, all the other stocks in that group are going to probably suffer just like they did before. So I would just say you're adding on risk. Yes, we have PMO rising. There are good things going on this chart. But if you're holding something in financials and this bank thing's going to come back to bite, it's going to bite you too. So that's why even though financials do look pretty bullish right now, that's the one reason for my DecisionPoint Diamond subscribers that I'm not really presenting too many financials, because it just adds that extra risk. So overall, I would say that we're seeing some good action coming through on these aggressive sectors, but we still have some overhead resistance to deal with. I'd say comm services probably looks the most healthy of those aggressive groups, so we'll look in there. And staples still looking the strongest, so we'll look in there as far as industry groups and at the charts themselves. So let's look at those charts themselves. We already looked at industrials, which I have to say are looking very interesting right now. So, and then somebody had a question about semiconductors, so I promise I'll show you that chart. So financials, like I said, let's look at those just really quickly. You can see participation is expanding, but we still don't have 50% above their 50 and 200-day EMAs. And that's not a bullish reading. So there's still some problems going on there, but we do see a nice expansion of stocks above their 20-day EMAs. And that's due to what we're seeing here on financials in general. They have gotten over their 20-day EMA, but we do need to see the rest of them getting above their 50-day EMA, just like the sector. And we're not seeing that just yet.
I keep hearing people talking about the banks. Silicon Valley Bank had long-term assets like 30-year bonds, which had lost about 30%. Then they don't carry them on the books as mark to market. They carry them on what their face value is. And that's a problem with a lot of other banks too. I mean, it's really a matter of incompetence. It's what it appears to me, is these people, they're not paying attention to their job. That certainly was the case with Silicon Valley Bank. And there's leverage throughout the system that it's a big problem when the big, what I consider the cause of the crash of 29 was the fact that they had 10% margin. You had to put 10, now you need a 50%, but a 10% margin leaves no room for error. And when it started going down, there was no stopping it. And you have that kind of leverage out there. There's always lots of leverage out there that we're not aware of until things start going south. And over to you, Erin.
Yes. All right. So here is regional banks, just to give us a little bit more discussion here in financials. But like I said, I'll go to those others. But we do have a falling wedge. So, they're set up to break out. But notice that on the financial chart we just looked at, notice what's happening. Nice rising trend. What's going on with regional banks? Still in a declining trend, still showing weakness. This is still a problem. And investors are figuring that out. And that is why we're not seeing this area of the market performing like we're seeing as far as the financials in general. So it's just something to keep in mind. Probably not a good idea. Well, certainly your risk is much, much higher to get involved in the banking industry groups right now. So I did say we would look at comm services, which is breaking out right now. If this is going to be a bellwether for the market and we see this breakout, we could see the same thing happening on the market itself. I think my dad and I are still of the opinion there are enough problems out there. We just talked about the banking problems, but really it's those indicators of ours, those overbought indicators, and seeing them turn down. But in any case, this is what we do want to see if we're going to build a foundation for this rally to really get going again. And comm services looking very healthy here. We do have over 50% above their 20 and 50-day EMAs. So I would say in the short term with that rising Silver Cross Index that there is a bullish bias still going on in comm services. Now, when we look at technology, there you go, rising wedge similar to Apple, which we looked at earlier. But the PMO is rising here for tech. But notice that the participation hasn't really done anything. So we may have gotten this nice big rally here in tech, but it really did not translate into participation. So it's a smaller group leading the move right now upward and not the broad technology sector. So that still looks a little weak in my opinion, even though we are starting to see a little bit of a breakout there. Consumer discretionary, looking pretty good here. I mean, it's still in a sideways trading range, but it's not breaking down just yet. But you see the flat PMO, flat price action. This doesn't look like a sector really on the rise. But underneath the surface, we are starting to see some really nice participation of stocks above their 20 and 50-day EMAs, even above their 200-day EMAs. That's over 50%. But that's still not translating in price. So that tells me there is still some weakness as far as the stocks that are leading this particular sector. But we really want to see that breakout. I mean, if that kind of participation is there, we should be seeing a price breakout, and we haven't yet. Here is Staples, which I told you would look at. Really nice breakout. It actually broke out earlier last week. You can see right here, that level has been broken. And the participation is just fantastic. Notice it really hasn't lost anything. The participation level is staying right about the same. And that tells me that we could see prices move higher. But I do notice there is a possible, what we call bear shift in motion here. It's shifting the character of this sector. And that is that Silver Cross turning down. And if we get the negative crossover here on that Silver Cross Index, well, that could mean trouble for not only the consumer staples sector, but for the rest of the market as well. Since currently, if you look at the dashboard, currently the some of these defensive groups, utilities, healthcare, staples, you can see are in that top 5 here. And we don't want to see those groups leading, because that usually means that we're in for a bit of a decline. Oops, excuse me. I'm trying to move something out of my way here and it's not doing it. There we go. All right. So a couple of industry groups that we can pop through and look at.
You were going to look at semis?
Oh my gosh, you're right. Thank you. Let's do that. And then I think we probably should just get on to some symbol requests.
Okay.
Okay, but we do have the under the hood. Thank you for that. All right, so semiconductors and a rising wedge, just like we saw Apple and a rising wedge. These are bearish formations. The expectation is a breakdown. We did get a breakdown back here, but I don't think that that resolved this wedge yet. It's just a little tiny breakdown, and we've immediately gone right back up into the pattern. So I wouldn't consider this pattern busted yet. It still does tell us to expect a breakdown, but we could see a little bit more of a push upward toward the top of this wedge before we do get the breakdown here on semis. We are seeing some participation that is starting to move to the upside here. And, you know, if we were in a different market environment, I would be thinking, you know, semis are looking pretty good here. But if we're going to start seeing those interest rates rising, there's problems going on in Taiwan. As we were saying, South Korea, those are some areas that you'd want to be careful of in the semiconductor space. But the PMO flat, not really giving us any reaction yet to the rally that we saw on Thursday, Friday, and now today. The PMO is still flat. That tells me that there's still problems under the surface for semis. I would just have those stopped really tight right now. I think that's your best protection. All right. Forgive me, we didn't get into any industry groups, but I think that the symbol requests, we're going to end up getting some of that information as we go. So let's go ahead and get started on those unless there's other questions in here, Deb.
Okay, I'll look for any. Okay, it is nearly impossible to make any money on stocks that go up on gaps like Microsoft, Facebook, Apple, unless you own the stocks prior to their gaps. So as I see it, the indexes are going up. Generally, nobody can capitalize unless one captures the gaps. That requires a crystal ball. Yeah, I guess I will agree with that.
Yeah, it's been a rough market, and we are getting whipsawed so much that yes, a lot of times, you know, with diamonds, I'm running into the same problem where we pick them. They'll do, you know, I'll pick them on a nice gap, or I pick them on a nice breakout, and then the market decides to shift, and the position will go up for a little bit, and then you're left waiting and waiting and waiting. So it's a problem for everybody. Don't feel like you're alone. I think we're doing pretty well with our DecisionPoint diamonds. I didn't do our commercial yet, so I probably should do a commercial. Suncor Energy. So the energy sector is still having some issues right now with oil. So, you know, Carl looked at that chart and we are seeing a little bit of bounce. The bounce is coming higher than the prior low. So we're getting a higher low, which is good. We're getting a rising trend, but I'm not really sure what's going on here with oil. It looks very weak, and that's going to put a lot of downside pressure on these particular stocks. Let's look at the technicals straight up. We've got the PMO rising, stochastics are rising. The RSI is currently negative because it is below net neutral 50. So I would say, looking at this chart, it doesn't look too healthy. You've got a 50-day EMA that is in the process of giving us a death cross. I could see this as a hold. I would want to tighten my stop because, like I said, I think crude oil is looking a little bit shaky, and you'll want to protect some of those energy positions. This one does look like it might give us that breakout above the 50 and 200, but I would tighten that stop in case that proves to be too difficult for it to get over. I don't see this as an entry. What risk do you see in South Korea that makes you not want to own their stocks? Well, unfortunately, Dad, that was your opinion, and I'm not really sure where you were going with it. But in general, there's a lot of unrest going on out that area. And it's just something to keep an eye on, because if things go south with Taiwan, it's not too far away. And so we would just be careful with that. I know Kupang has been on my list, and I believe that's South Korea, and it's doing fairly well. Okay, but unfortunately, Carl left, so I can't get his opinion there. I know that a lot of it is just due to the unrest. Suncor just bought Total Energies. Like I said, I'm really more interested in the technicals, and I think the technicals on this chart are a hold, but not a buy. If you were an XLK since $40, what would you do now? Well, wow. So if you've owned it that long, I don't think I'd be losing too much sleep here. I would probably set a nice trailing stop on that, maybe a deep one, since I was, in such, had such a great return going on at the same time. Maybe I would sell a portion of it just to lock in those profits. But overall, I mean, technology is still a hold, but I would have a nice stop on there, maybe below this level here at 142.50. If you wanted to go deeper, you could go down toward this 200-day EMA. But I would still want to stop in place, because if this market turns like we're thinking it will, you could be in for a very long decline. And I know you probably didn't enjoy holding during that period. IBB, we actually have under the hood indicators for. Okay, so I'm just looking at participation before I even look at price action, because that's really important to me when I do have under the hood indicators like this. And you can see that participation did tick up on the rallies that we've had, but again, just not the expansion that I would expect, particularly on stocks above their 20-day EMA. And I say that because, it's not like this has been in a deep decline, and there are a lot of stocks that have to, make their way slowly over their EMAs. We've had a nice rally. Yeah, we had that big decline below those EMAs, but overall still in a pretty nice rising trend. We should be seeing more expansion of participation of stocks above their 20, and we're not seeing that. Full disclosure, I do own IBB. I tightened up my stop, and fortunately it wasn't hit on this decline, but I'm still holding that stop. I am not going to raise it at this point, because I do think there's possibilities here. You do have the RSI rising. The PMO is whipsawing back into a buy signal. It actually has whipsawed back into a buy signal. So something to consider right there. But IBB, this bothers me. I really want to see more participation, but it's currently a hold. I don't know that I'd want to enter until I knew that PMO was really on its way up. IGMS. I don't know if it was because I dropped off. I'm not really sure. I think he's still listed as a panelist. I'm not sure what's going on there. Such as live TV. Okay, so IGMS, biotech. And like I said, we looked at that biotech chart, and, I think there's certainly some good stuff going on. But like I said, the participation is a problem. But I have to say, really thinking about it, there's a lot of cats and dogs in biotech. You have the strong stocks, but you also have a lot of really small volume, not great stocks. This one is not a great stock in that area. Yes, it is making the turn, but first of all, it's a low price stock, so you're going to get these swings like this. So have the antacid ready for when you get into a biotech, particularly a low priced one like this. I like what's going on. I like the improvement. Relative strength here is about the same for this stock against its industry group. So we have a stock that maybe isn't showing leadership necessarily within biotech, but it is in line with it. And that IBB chart didn't look terrible. Stochastics rising. I mean, I think this looks pretty good, but it's just got a lot to overcome here from that big decline. I wouldn't really trust it, to be honest. I don't know that I'd want to be involved in something that would really have that opportunity to decline the same way it's rising. That's not my kind of stock, but we do have a rising trend and the indicators are starting to look good. So certainly I'd say there is a bullish bias here, but I really want to see that price get over the 20-day EMA. I think this is a lot of risk here for this one just because it does bounce around. So it's not a terrible one. I think you could hold it. I think I would be a little bit stressed on getting in it. Hess, again, in that integrated oil and gas, and I kind of talked about that area, crude oil not reacting as it should. This looks really bad with the PMO on its way to a negative crossover. It's somewhat overbought PMO, not completely. So if we did get the turn on it, it wouldn't be a terrible thing because it's not overbought. RSI positive, stochastics looked like they were really going to make that move, and now they're already calming down. So I don't see this one as a good buy here. Certainly a hold. This would be your level of support here, and probably a good area to put your stop is right around that gap, either just below this gap where it started or at this gap support right here where these lows have been. You could come in just a little bit lower than that. But I would definitely want my stops in play on energy. And CVX, pretty much in the same area, so I don't think I need to talk too much about it. And there we go. We have a decline. The gap has been filled, and that typically means you're going to get follow through to the downside. So, because that support level didn't hold. It's holding at the 200-day EMA. It's holding at this little support zone. PMO is on the sell signal now. So I see a lot of weakness here. I'd want a tight stop. I just don't trust the energy sector right now for a move to the upside of any great deal or a big move. NVIDIA, really nice breakout. We did look at the semiconductor chart. Rising wedge has a bearish bias to some degree, but I have to say NVIDIA does look good on this breakout. It came out of this trading zone. But one thing I would consider, and I'll be interested to see what happens with NVIDIA here, is this looks like a pattern we call a pig's ear. You've got the trading zone, and then you get the ear that like pops out here. That usually is a false signal, and usually you're going to get some downside right after that. PMO is turning up, so I mean, I'm not saying that's going to happen, and certainly if you're going to be involved in tech, this is the kind of stock you want to be involved in semiconductors. It is just a clear leader when you look at relative strength. So I think NVIDIA still looks pretty good. I don't think I'd enter because of that possible pattern that I was talking about. I would be more interested on a pullback, but I'd also be interested to see if it's going to hold this support level. So I think that if we weren't in a precarious position in the market overall, that I would look at this and say, yeah, this looks like a good breakout. But the fact that I'm nervous about what's going on in the market, the fact that I'm expecting a big decline, that tells me I'm not going to be that interested in entry. But if you disagree with how I feel about the market, then certainly it's not a bad entry here. Bed Bath & Beyond. I'm going to make this a log scale chart. I don't like to use them because I can't draw trend lines. You can draw trend lines on them, but they tend to not be, certainly not tradable in my opinion. But so anyway, we've got this sort of rounded base pattern rather than a nice foundational base pattern. We want to see this kind of thing going on down this way. So that's a bearish formation just right there out the gate. Stochastics are rising, so it looks like it wants to make a move toward that 50-day EMA, RSI rising. This is really early in this move, if this is going to be a rally overall. We did break a declining tops trend line in the very short term right there. So that's a good sign. The PMO trying to turn up is a good sign, but it's a little too early for me, particularly given the bearish bias that I'm sensing in the market in the short term. So I know I keep saying, well, the overall market, and really that's how I feel. That's what I've been saying in the DP alert, in diamonds. You know, you can get out there and get in, but we really need to know what's going on in the market in general, and I don't like it. And so I don't want to risk by having, expanding my portfolio. I'm not expanding it. Currently, my exposure level is 30% on the long side, 4% on the short side. More in the hedge area are their ETFs that are marketplace to the downside. So they're helping me when we do get these drops, but it's going to also help me if the market does turn like I think, it'll give me a little bit of leeway to sell some of my positions in that way. Beyond Meat, not Bed Bath and Beyond, you're right. This is interesting. Let's see. That's interesting. Okay. Yeah, it's doing it. So the last ones are the ones I'm seeing. LOL. Yes. I don't think that was one that you were requesting. Yeah, Beyond Meat. But it is in staples, it is in food products, but I don't like this rounded top. And it is early. I think it will get that little breakout that we're looking for here, but I think it's going to be short-lived. But if you're going to be somewhere, at least consumer staples, food products look pretty good right now. Let me go down to the bottom. Christopher loves NVIDIA. I love it if the market were going to continue higher, and it just very well might. The Fed is going to kind of lean into this, but they've been so hard-nosed, hawkish about raising rates. I really have a hard time believing that they're going to let it go this time. I think that they're not going to this time. I think the only reason they cut back was because of the banking thing, but they still did one. So that tells you that they're probably going to do it this time. I don't think investors are going to like it. But they shouldn't really be surprised either. Yeah, a lot of people are saying that UNG is going to do well going into the summer. There's probably going to be a lot of heat waves since we've had some weird weather this year, and that could really help UNG. I hope you're right. I still hold it. My dad still holds it. They're long-term holds with I'm honestly, my trigger finger is ready to add to that position, but I don't trust it just yet. I think we're going to do well going into the summer, but I'd rather not add to the position and have to deal with some of the downside that we've had to deal with. Having a small position there is good. Are your chart setups available to members? Absolutely, Bob. These chart under the hood indicators are available on our website. Haven't been to that window in a while. So on our blogs and links pages for our members, we have these 3 chart lists. These are getting shaken up a little bit. The sector chart list actually includes the indexes as well as those industry group charts. So if you click on them, you're going to get the charts right here. You can see the snapshots. These are not live charts, but it doesn't really matter so much because the under the hood indicators don't update until after the market closes anyway. So they are snapshots. You can view them on StockCharts if you click on them. And you could save the chart at that point to your chart list if you're an extra member. We prefer you just, if you want to see the annotations and you save the chart, the annotations are likely going to disappear. And if you want to see the updated annotations, you want to be on our website because Carl keeps these annotations up to date. What would it take for TLT to pass 108? That's an interesting question. Carl wasn't quite as bullish on TLT as honestly that I'm kind of feeling right now. And that is because of this ascending triangle. We do have a big trading range. We've hit the top of the range. Does look a little bit head and shoulder-ish here, but the rising trend is still intact. And this is a bullish pattern. My sense is that if the market does continue higher, we're going to see what we're seeing today. We're going to see bonds moving lower. But if the market does what Carl and I think it's going to do, and that is to move it back to the downside, bonds are going to find favor. And I think that's what's going to get this about above 108. If the market does today, if this rally that we started at the end of last week catches hold, then yes, expect TLT to continue lower and lose that rising trend. But my answer would be what it's going to take for it to get over at 108 is a market decline. Is a rising wedge a bullish or bearish pattern? A rising wedge is a bearish pattern, and we were looking at Apple. So the rising wedge, I don't have the chart that my dad had, but you can see the wedge is coming up here. Here's your rising bottoms. Here's your tops, and they are not a rising trend channel. They kind of start to intersect. Those are bearish patterns. And the reason being is because the weakest trend line is actually the steepest trend line. So here you have those lows. If you drag it up here, you could actually get a rising trend channel, but you'd see that this top didn't reach the top of this trend channel. So that was a little nerve-wracking. But the wedge is drawn back here from these to here over these tops. And so the most difficult trend line to get, or the trend line that's hardest to hold, is the steeper trend line, and that's this one, and that's why we expect the breakdown. All right, 9:57, we are just about done. Let me see what is going to be the winning finisher here. Honestly, let's look at silver. That was an interesting one to me. And I do have that chart pretty much annotated and handy, so. All right. So silver had a nice breakout this morning, but it's definitely come back to earth now. And this is a flag formation. So honestly, if price were trading at the top of this range today, I would have a much different view of it. Right now, it looks like it's going to end up being a big bearish engulfing candlestick, which we don't want to see. Also, could be a shooting star where you've got that giant wick on the top of your candle. Well, we can't have that because of the open being up here. So what we could end up seeing here is a big, giant, bearish engulfing candlestick. I liked what was going on this morning. I don't like what's happening now because the chart itself, the technicals don't look so great. The correlation between silver and gold is they're starting to decouple, which means that they don't travel the same direction necessarily. Normally, they do travel in very much the same direction. So interesting to see that decoupling from gold going on. But I like this. I do really like that flag formation on silver. And if we do start to see the market fall down, then that is going to be a place people will go, the safe haven of gold and silver and bonds. So really a lot right now is dependent on which way the market is going to break right now. We believe it is going to break to the downside. The Fed is going to make a big difference. Unfortunately, we are in a holding pattern. It's the worst thing that I feel like I can say as a technical analyst is we'll wait and see. Because everybody can sit and wait and see. But unfortunately, I think this week we kind of have to play that game of wait and see where the Fed goes with this move and what is the language that's going on with this rate rise or no rise. That's going to really be dependent for the market, I think, and where it's going to go. But I'll tell you what, the technicals are leaning bearish in every respect in our minds. So if we're going by the technicals, we're expecting this rally to peter out very shortly. If not today, then in the next day or two. So that's kind of where we're at. I thank you all for being here. I'm sorry you had to deal with some of those technical issues where I dropped off. Carl's mic went out. It's just one of those things when you end up with this. And I know that our email was wrong this morning. I think it didn't go out because Zoom thought that our trading room was Thursday and not today. So just definitely a little bit more of an issue going on this day technically. But on Monday of next week, everything should be the same. And just know that the entry into this trading room, if you come live, is always, always, always the same and has been for now since I started the trading room probably a year and a half, 2 years ago. So if you're a regular, just save that link, bookmark it, however you want to do it, and you'll be able to get right back into this trading room. Thank you so much, and good luck and good trading.